tight trading range through 42, 43. I think it's okay to buy above 41. Normally, I would take that second entry after a sell climax for a test of the moving average, but I didn't. Good bull bar, 44, breakout, so we have a spike down, spike up. It's a climactic reversal. On some time frame, it's a 2-bar reversal. On a higher time frame, it's a single reversal bar. I think, the sell-off has been strong enough so that there should be shorts at the moving average here. I would short the moving average. I would not short below the low of the bars, especially after this 4-bar ledge to 48. You can argue 2 pushes down, 45, 48. I'm not buying up there. I think the moving average shorts should be able to at least get close to hitting their profit target, so I'm not buying. Okay, the spike down, 5-tick failure at 50 to a higher low. Possible long setup, for a move back up into that wedge area, maybe up to the 32 high, maybe all the way up to the 56 price level. Yesterday's close. Earlier in the day, the 3 low, the 5 high, the 9-10 high, the 14-16 low, and then again, the 17-18 high. The market kept reversing through 56, so the market obviously considered it to be an important price, and it's possible we could get up there again. Okay, on the higher low, the market pulled back on 52, so that is a small breakout pullback. 53, a bull bar, trying to resume the trend, maybe buy above the double top. I did not, and I ended up chasing this. 55, 3 pushes up, 40, 45, 55. I personally would not short this. I think the market should trade up to the measured move and trade up to 56. I think it's more likely there will be buyers below this bar. We had a good spike up on 44, another good spike up on 53, 54. I think this should fail as a reversal attempt. 56, a small breakout pullback long. I didn't take it. There were several things today that I didn't take, and other things today I ended up chasing or entering late. I was just a little bit slow today, and sometimes that happens, and there's nothing I can do about it. I try hard, but sometimes I just don't do as many things well as I want to do. Third push up to 58 here. First is 45, and then 54. But it's a fairly tight channel, so I'm not going to short it. I'll short a lower high, but I'm not going to short a higher high. You could argue trading range day, second entry short, 56 is the first, therefore it's an okay short, but I want to short a lower high. So at this point, I'm looking to buy a high 2 near the moving average, or short a lower high, or possibly a higher high. This little move is enough to break the trend line below that little wedge, so that would allow me to short a higher high if we get one. Okay, 65 I think was interesting, a bull reversal bar, high 2 at the moving average. I think it's a good long, good entry bar on 66, but then you're stuck with, what do you do? You had a tick or 2 or 3 open profit. Is that enough to move your stop to break even? To below the entry bar, or do you keep it below the signal bar? To me, I tend to look at the overall structure, and if I think the structure is pretty strong, I keep my stop below the signal bar. But if a person can get out below the entry bar, I would say that's fine too. Double bottom with 69, but lots of dojis. I think this is a problem for the bulls, and now the market's trying to reverse down at 70 with a little bear bar. Possible 2-legged lower high. I think it's an okay short. I certainly would not hold long at this point, even though arguably you could keep your stop below the 65 signal bar. Decent entry bar on 72. At this point, I'd move my stop to above the 72 high. But then 73 was a problem. It hit the low of that 65 buy signal bar, and closed up near its high. So at that point, I exited my short, and I thought about buying the double bottom, but I didn't place the order. And then when the market started to go up, one tick, two tick, three tick, I just went ahead and I bought on a limit order at 54 and was filled. I originally was going to go for 2 points, thinking there was room up to 56, but with all the reversals that have taken place over the past hour and a half, I changed it and moved my limit order to 1 point and got out at 55. The market had a pullback, respected the 74 entry bar low, formed a higher low at 78, or a breakout pullback at 78, and rallied above 56 into the close. So a tough day. Some days, I feel, really energetic and, just, really aggressive. Yesterday was one of those days. Day before, I was like that too. And today I just felt like I was a little bit slow. The one biggest mistake of the day for me was buying above 32 and then not exiting on the low 2 and not shorting. Normally, if I'm buying channels, I like to buy higher lows, but the wedge looked good enough, so I thought I would take a chance. To be honest, that wedge probably had a 60% chance of success, but I still have my rule that if I'm buying counter trend and there's no higher low, that I get out on the low 2. So I broke one of my rules as well. It's really interesting. I think it goes beyond what the unemployment report itself says. I think it also has a political component, just like the stock market took off when the Republicans took over Congress in '94, and just like the stock market sold off violently when it became clear that Obama was going to win the Democratic nomination. A lot of times political events I believe they affect the market. And by the way, I'm not a Republican or a Democrat. I'm very independent. But what I was saying is the unemployment report may affect the turnout for the election. And if it's a very bad unemployment report tomorrow, there probably will be a lot more people voting for Republicans. And that will affect the outcome of the election and probably the outcome of legislation over the next year or two. And I have no idea what that means for the stock market. I don't know if it's good or bad, but I do think the political component has a big influence on the market. You always hear that the stock market does better under Democratic presidents than under Republican presidents. And to be honest, I don't know if it's cause and effect, because it doesn't say anything about Congress. And I think '94 went up because of the Republicans taking over Congress. Clinton was in the White House. There was a Democrat in the White House. When people attach a relationship to the stock market and which party owns the White House, I think it's foolish because it ignores which party controls Congress. And I think that is every bit as important. Anyway, enough of this nonsense. Tomorrow should be a really interesting day. The market is so overdone that we could have a pretty decent sell-off. Who knows if it'll come tomorrow. There's this gap down here at the start of this channel. I mentioned the 1110 area. To me, that seems like a logical target if we sell off. But it's possible that we'll sell off like we did in June, really, really quickly. Like a 40-point day down, taking us to, it's possible a 40-point day would take us down to 1120 all in one day, and then there's not a heck of a lot more to the downside. If we do start selling off violently tomorrow, probably we'll end up buying spider puts early in the day. If I'm planning on holding them over the weekend, well, I don't know if I would. If I had a windfall during the day, I would just exit. So as I think about it, if I do buy spider puts early and the day's selling off, I probably will just exit them. I was going to say the alternative would be to buy a spread, but in general, I only like to buy spreads if I'm planning on holding something for at least a couple of weeks. If I'm just planning on holding it for a couple of days, I just buy an outright put or a call. Normally, if I buy an outright option on a Friday, I exit it on the Friday because I don't want the extra 3 days of time decay. All right, so tomorrow should be interesting. Good night, everybody.